We're now being joined by Ms. Priti Rathi Gupta, founder and MD Lxme, India's first neobank in making exclusively for women. Thank you, Priti, for taking out your time and speaking to us on this very special discussion. I want to begin by asking you about, the demand of gold as an investment, and it has been soaring despite an upswing in prices. And despite these factors, given the current situation, what do you think can be done to maintain the same kind of enthusiasm and interest in the consumer?
First of all, thank you for having me on the show. And gold is especially very spoken about in Lxme because, as you know, that women, the first, place they put money in is always gold. And I think that remains because not a lot of women are aware of any alternative investment avenues. And therefore, I think, the investment in gold will continue to happen, particularly in rural and upmarket India, right? Having said that, let's just sort of look back on what happened over the last 2-3 years. Gold has traditionally been like a safe haven asset class. People put their money in for either, if there were inflationary pressures, if there was anything that happened, anything that went wrong in the world, right? Any crisis, geopolitical or any crisis, gold had that store of value. And in those times, it soared in value, right? Second was it always offered a lot of liquidity, particularly in our country. It was the easiest to sell off and get money, which is why people put a lot of money into gold, and which is why gold continues to be a part of any asset allocation, right? What happened during the COVID times was that suddenly we had a unique event, which none of us had ever dreamt of. Nobody in the world thought that this was once in a lifetime black swan event, right? And what that did was, one, of course, the gold prices, as expected, went up. So internationally, it was trading at, I think, $1,500 in August 2020. And it shot up to close to, I think, $2,085. That was probably the highest that it touched, $2,085 an ounce, a troy ounce. Interestingly, what also happened was dollar appreciated. The dollar index went high. And therefore, for us in India, it was like a double whammy, right? The prices just moved up because the dollar also moved and gold prices also.
So you're saying that they have a direct bearing on the prices of gold in India and in the world. The truckers' protest in Canada, talk about the George Floyd protest in the United States, the current war in Ukraine that's underway, that has a direct impact, you're saying.
So any crisis will have a direct impact on the price of gold. What I'm saying is COVID was a very, very different event where even the dollar appreciated. Right now, whether it was because of the Fed monetary policy, the dollar continued to rise. So for us in India, it just got more expensive. Or the reaction, let's say the surge in prices was actually very high. And what it gave to investors was a huge return, right? An unexpected return over 2 years, which was between, 2019 to 2021. If you look at the gold returns, they are phenomenal, right? And which is why a lot of money poured in. Unfortunately, investor psychology is such that when markets are rising, when prices are rising, more and more money comes into it, right? That's where we were. I think what has happened over also the last 2-3 years is the government, in order to stem our, import bill, launched the sovereign gold funds, right? And that's where it was expected that, a huge amount of that investment money would go into. Yes, I think today also there is about 100 odd tons of gold that is held under the sovereign gold bond. But even today as a country, we are consuming, close to 900,000 tons. We used to be the topmost consumers. China beat us to it. But today also we consume close to 900 to 1,000 tons per year. So we are the second largest, consumer of gold. Most of this gold comes into investment avenues. However, as a country or as a population, we are also, our price sensitivity, especially when prices are too high, is also there, right? So when prices go beyond a certain point, you'll suddenly see demand really slump. So we've seen all of that. Today, I think gold is, I think, stable. We are around, I think, $1,800 internationally in price. I think dollar index has also stabilized. So we think that prices, I believe that this is the range that we will stay in for a very long time.
Okay.
When it comes to investment demand, I think, investment demand will continue to come into gold, because one of the biggest learnings from the COVID times was that if you need to have an asset allocation, gold must make some part of it. So even in the mature investors, gold or sovereign gold bond is actually a great, it's become a...
Now, we're going to touch upon the COVID impact, also, the recession impact that the gold investment scheme could in fact witness in years to come, in months to come, for example. But let's talk about what you're telling us about the schemes. The gold ETF, for example, is different from the gold mutual funds. But how is it that one can urge the masses to indulge themselves in these schemes, given the inclination they have towards buying physical gold?
So I think this is what we do all the time in Lxme, because there's a huge benefit in, putting your money into any form of electronic gold. So I think one is, if we highlight that the cost of holding physical gold is, so much higher than maybe an electronic gold. And typically that cost is, including GST or insurance, it's close to 3 to 4% of your total cost of gold, right? So that itself is a huge selling factor. In terms of also liquidity, right? While we know that even physical gold is liquid, here what you are buying is pure gold, or at least what you're putting money in is the price of pure gold. And therefore, whenever you redeem it, you're getting the price of the purest form of gold. I think the cost of buying gold as well, not just of storing, but also in terms of transaction cost, we know ETFs are a lot cheaper, in fact, even than mutual funds. So that's an added benefit.
And how much is the difference? For my understanding, how much is the difference if, let's say, you're purchasing physical gold of the same quantity vis-a-vis electronic gold?
So like I said, a physical gold, you would incur a 3 to 4% of cost, right? If you buy a gold ETF, it is not even, it's possibly 0.5%. If you buy a gold mutual fund, it is about 1.5%, right? So that's the sort of difference.
So thereby it has tax implications as well.
Let me come to the fourth biggest benefit, which we talk about to our users. You see, in gold, particularly in gold mutual funds, you can actually put in very small amounts of money, right? You can begin with 100 rupees to buy gold. In ETFs, you need probably 1 gram, worth of 1 unit of ETF is 1 gram. But a mutual fund, you can actually buy just 100 rupees, and you can discipline it by doing an SIP. So you're not, timing the market, and you're making use or you're getting the benefit of all market movements. So that actually is one of the biggest, and particularly in the retail, it's a huge win-win to be able to buy a gold mutual fund because of these added benefits as well.
Okay. And what about the tax implications for holding these digital assets?
So I think typically they are taxed, as per the capital gains tax. So if it's a short-term holding, then it's applicable, your tax slab is applicable. And if it's a long-term, then typically you also get the indexation benefit. So it's a 20% taxation with indexation benefit. So that's a benefit as well.
Okay, so user-friendly and saves people from that kind of taxing as well. So it's a plus in your perspective so far.
Absolutely, it is.
There just needs to be greater awareness.
That's true, and I think greater awareness, and because our need for example, whether it is real estate, gold, it just in our psychology, it is like I can see it, I can feel it, I can touch it, and therefore it's a great investment. And I think that mind shift is very important. And there is a lot, of course, a lot of awareness, but once you highlight, and we've seen this in, for women in Lxme, that switch is very easy once they understand the benefits.
What about the purity of gold? I remember you'd mentioned it in the beginning of our conversation, that's also a factor that the consumer keeps in mind while perhaps thinking of these alternatives. So how key is that to shifting the goalpost of the consumer from physical gold to digital?
So like I said, it's a 99.5% purity. I think that is a huge moving factor. However, in physical gold today, you have hallmarking, you have all of that also happens. But having said that, what you are buying, what you're buying is actually the price of it is benchmarked to absolutely pure gold, the purest form of gold that is available. And I think that is a huge selling factor as well.
So doesn't it act as a deterrent to switch to such schemes?
No, it doesn't actually, because the reason why people buy gold is typically, we hear women on the platform saying, oh, I have a daughter and I want to buy gold for her marriage, right? Or I just want to buy gold because it's a store of value. I've saved some money and I don't know anything else but fixed deposits and gold, so I'll buy some gold, right? And typically over the years, what's happened is the way to buy gold was gold jewelry. And I think increasingly women are realizing that gold jewelry is possibly, along with trying to create an asset, you're also creating a liability, because then you need to store it. You need to be careful about it. There are making charges. There is a cost involved. So the right sort of messaging is that, invest into it, and you can at any point in time redeem it to make jewelry, and you're actually getting the value of purest form of gold. So when you're actually making gold, you can, make it into whatever purity that you want.
Okay.
At least your investment. And I think which is where, the whole conversation of indulgence versus investment is very, very important.
Okay. All right. Thank you for that. We'll have to wrap it up with that. Thank you for taking out your time and for speaking to us.
Pleasure. Thank you so much for having me.